From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Good afternoon, welcome to the COB, all the stuff you need to know in the day in business and markets. I'm Kyle Rodder with Danny Akuye, and well, Danny, let's have a look at the market because it sort of really steamed into the day's trade.
It looks like it has steamed into the last part of the trade. We are up about 1/3% for the COB 200, or 4.5 points, and about 25 points on the ASX 200, also just over 1/3%. So that's a nice surprise.
Yeah, it is. And again, I don't know, or didn't see
Why?
necessarily any sort of catalyst there, but nevertheless, we'll take it. So only, well, it's a small gain, but again, a positive one, and certainly seeing a bit of momentum there towards the end of the day. Let's go to the three themes, however, and there's a few things that we're keeping an eye on. First of all is, again, just that run high that we did see into the close, but a few other things that, well, were certainly themes for the day. The bank results.
Indeed.
The CBA,
indeed. Better than expected. Well, actually not better than expected, but the market share prices reacted as though it's a little bit better than expected.
Yeah, for sure. And we did sort of see the stock price coming back in the lead up to the session, perhaps burnt after last set of numbers for the half year, where everyone seems to be buying into the result, and well, folks got burnt. But anyway, profits, basically record profits, I think, almost 10.2 bill. Really
the buyback's
there.
good.
Buyback, $1 billion.
Dividend.
Buyback and a dividend at $2.40 for the half.
Right.
Which was higher than expected.
There you go. So you'll always find some love for the share price if the dividend's higher than expected.
Indeed. And well, also news today, this is more macro. Deflation nation, China. CPI falls by 0.3% in the month of July. And the PPI also was at negative 4.4%, which was a bit below expected. The CPI figure was a little bit higher than expected. But nevertheless, seeing some of those signs of weakness again in Chinese economic data. I had a great chat with actually Janu Chan, who's a bit of a China watcher as well, covering off the trade data yesterday too. Clearly things are still looking a little soft in the Middle Kingdom. But let's get across the sector, shall we, Danny?
Yeah, indeed.
Start with the banks.
Yeah, have a look at the banks, see how they traded. And there is Commonwealth Bank, up 2.7%, or $2.79, 104.98. But also Westpac and NAB found some love off the back of that.
Yeah, Macquarie down only slightly. Let's look at the tech sector because it was another area of the market that seemed to thrive today. Wise Tech back at about $88, and that must be close to another record high. I know it had an 88 in front of it. Whether it was to the cent, I'm not too sure, but nevertheless, looking very positive there for Wise Tech.
It looks like, don't you think, our Australian All Tech Index, it's like the little steam train. I think I can. I think I can. It just keeps on chugging along. Whereas in the US, there's actually been some pretty chunky profit taking in some of their technology stocks. But no, not down under yet.
Not yet anyway. Xero up slightly as well. Altium, as you can see, they're also eking out again. Technology one too. Let's get to the healthcare stocks because that has been a little bit more mixed, and you have to say there's still some selling coming through there. ResMed in particular.
I know why.
Yeah. Well,
apart from it was being sold off in the US, but I listened to the Eli Lilly, who reported very good results,
right,
and Novo Nordic. They are doing, so you know they've got these weight loss drugs.
Right.
Okay. And weight loss is good for sleep apnea.
Yep.
They're doing sleep apnea tests with their weight loss drugs. So it has been flagged. He did discuss it, in, dare I say, on an interview on CNBC today. And whilst it is right to assume that it's a fairly long string to draw, there is potential disruption from what were these diabetes drugs that these two companies have that are now being tested as weight loss drugs. And it cuts across everything from cardiac heart problems to sleep apnea to absolutely everything.
Yeah, well, it's a silent killer, sleep apnea. And well, if you don't have to wear that god-awful and loud mask on your face.
A CPAP.
A CPAP
AI.
Instead. Exactly. Everyone will be happy. Spouses of
Not
those
AI,
with sleep.
I mean ET or whatever it is.
ET, yeah. No, everyone would be happy if perhaps there was a better way to deal with sleep apnea. Again, a silent killer. But nevertheless, weakness across the healthcare space once more. And there you can see, just flipping over the page there, some of those smaller names, Telix, Pro Medicus, Ramsay, Ansell up slightly, Helios as well. We spoke a little bit about CBA already, but best to cover the numbers in detail. Full year cash profit up 6%, revenue up 10%. The net interest margin was up from a year earlier and was higher for the full year. Tale of two halves though.
Yeah,
we saw
absolutely.
sort of a peak in the first half, down to about 2.05% over the last 6 months. But that share back fairly tasty, and a dividend. Finding different ways to return all that cash to shareholders, perhaps.
Indeed. And I thought that what was quite interesting was the differentiation between their different customers in terms of demographics. It really told a very stark picture, didn't it, in terms of the older boomer generation really benefiting from high deposit rates and also outspending, and of course the younger generation being quite heavily hit by the interest rate rises.
Yeah, it made me think you owe me dinner or something like that, I think, to try and
I have a
compensate.
mortgage.
Okay.
And that is so unfair.
No,
I'm technically maybe, but not really.
Not really?
No.
Yeah, it's
all
semantics.
about it is semantics.
Semantics. We love that word here. Okay, let's move on. Dexus, I actually had a chat with them today.
Property write-downs.
Yeah, it was. I mean, naturally they were fairly optimistic on the industrial space, and there are some pretty significant tailwinds there when it comes to sort of, reshoring, just in case logistics and what have you, and, vacancy rates are still very, very low in the industrial space, but still real focus on getting the balance sheet right for the last 12 months or so. Only managed to maintain its FFO funds. Help me out there, can't remember.
I don't know, FFO. Oh, that's the equivalent to the distribution.
Yeah. I know, the distribution is 16 cents.
Oh, sorry, it's their earnings basically.
Yeah, 17.1 cents. So that was steady, but they're looking at trying to search out for higher yielding opportunities. That was the message there. Also, Suncorp. Now that was interesting because they had an extra layer of intrigue because of the ACCC decision last week. Didn't seem to move the share price a great deal, but it was down, what's that, 1.6%?
About 1.7%, 23 cents.
Yeah, so you get the sense for that business, it all hinges on whether it's this sort of appeal to the tribunal is successful or not. And as I understand it, it's a sort of a lower bar to meet than what the ACCC sets in terms of trying to determine whether it will be, sort of adversely affect competition.
Mm-hmm.
Anyway, it's a big earnings season, so we thought we'd dig into some of the details there. But the stock of the day.
Yes, Lovisa, indeed. And there's been a downgrade, which gave the stock a bit of a wallop today. Yeah,
Macquarie downgraded it, slapped it down, citing obviously concerns about domestic as well as global consumption. So we had Henry Jennings from Markets Today and Andrew Violent from DP Advisory giving their view on Lovisa.
$35 to $22 was their downgrade. I've got to say, I don't know where they plucked the $35 from back in April. That does seem a little bit jousting sticks to me and a little bit dreaming, to say the least. And really their argument is that consumer spending is slowing down. Well, we know that. And having a picture of an empty store on a Friday lunchtime to back up your research in Pitt Street. Oh, actually, no, it was in QVB store after lunch on Friday, the 16th of June. Not a single person in there. That's obviously part of it. I think this one, for me, is still a hold. I think, we know that the consumer is slowing down. We've seen that, but Matt Common this morning was alert but not alarmed.
You don't have to be a rocket scientist to figure out the consumer is under pressure. I think the job now is to figure out when they'll start coming under less pressure. In other words, when will interest rates top out, stabilise, and then actually start coming back off the boil? And the answer to that question for me is probably another 9-12 months. So consumers might be under a little bit of pressure for a wee bit longer, but there's actually opportunity in this sector if you're willing to look through the noise. I don't think it's a buy yet. It's absolutely a pretty solid hold. Dangerous buying any company coming into profit reporting season, but I'm pretty interested in this one, and I agree with Henry. I think Macquarie has gone too cautious too early on this one. Any weakness over the next couple of weeks, in particular on that result, and it's definitely one I'm interested in particular, a 90% return on shareholders' funds and management buying stock. I'm interested, but it is a hold. Yeah.
So maybe piquing their interest there a little bit, actually.
Yeah, well, we'll have to wait and see what the earnings are like.
Yeah. I don't know much about Lovisa, but it does make you think that if it is a good business fundamentally...
Fast, cheap jewellery.
Do you think it's a good business fundamentally? Do you have a view on it?
Is it a good business? Well,
is it going to be around in 10 years? So when the cycle ticks up again, you might be,
I don't know.
No.
I mean, look, fashion is hard. It comes and it goes. It's been incredibly successful. Lots of people love their stuff. Yeah. But, it just depends. They're very clever at copying the latest trends and putting it out there, and it's very, very cheap. So I would have thought out of all the retail businesses, because it is so cheap, it's probably going to be more resilient.
Yeah, interesting. Okay, well, I'm not very fashionable, so I really wouldn't know it all. But let's get to our guest, and of course, it's Will Symes from Macquarie Capital on this Wednesday afternoon. Will, great to see you. Let's get just a view on reporting season in general so far. Obviously, we're in the thick of it now. So, what's your assessment been?
I think it's actually been a bit of a rocky start to reporting season, to be honest. James Hardie yesterday was the first company who've actually had rally on its report. And it was a really strong report, and we've done quite well on that and in the building space more recently. But I think it's been a bit of a rocky start, to be honest. James Hardie and then obviously CBA today, the only two companies so far to actually end the day higher on their reports. And so I think the focus at the moment is certainly on guidance and the outlook. The economy is remaining quite buoyant, and so I think where we're going to see downside surprises are those companies that aren't delivering on a more buoyant economic picture to what we were looking at only a few months ago.
Yeah, it's true. It does look like the market's really focusing in on margins and what's going on with margins. And do you think that's going to be a factor going forward as well as guidance, but just how well these companies are coping with their cost increases, passing them on?
Yeah, well, I think that's the key thing, margins. And obviously everyone's being hit by the impacts of inflation, consumer budgets are tightening. And so it's about trying to maintain those margins in a period that we haven't been in for a long time, where inflation rates are eating into profits and eating into those margins. And so I think the focus will be quite heavily on margins moving forth, but also particularly on guidance as well, as it usually is around reporting season.
Indeed. CBA results, what did you make of them? Because, we've seen the share price higher, so clearly, I suppose, investors largely welcoming what was seen.
Yeah, look, I think they were reporting on a pretty tricky backdrop on the back of Moody's downgrading 10 of the small to mid-sized banks yesterday and putting a number of other of the larger banks on credit watch. And then obviously we had Italy's profit windfall tax. So I think those two factors sent bank indexes down yesterday. I think CBA had a bit of a tricky time reporting on that backdrop. But ultimately, look, it was a positive report. They had their NPAT come in at 10.16 bill, up about 6% year on year. And that was largely driven by stronger lending volumes. I think the other key thing for them was that their net interest margin rose quite significantly, up about 17 bips to 2.07%. That said, I think that their guidance was a little bit weaker and left some to be wanted there, to be honest. Matt Commons certainly noted that they're seeing consumer demand moderate, and that softening consumer demand is going to be impacting their margins moving forward. So I think the two key issues there for CBA are consumer demand, but then also quite fierce competition in the space. And we've seen their net interest margin fall down 5 bips from the first half of the year. So although it was still a strong net interest margin read, it has been impacted with rising rates, and I think that's probably something to be watching for CBA moving forth.
Our colleague Andrew Gagan actually interviewed him, so people can watch that on the website, Matt Common that is. I thought it was interesting. He said he thought they'd be cutting rates next year, which I thought was quite interesting. He said the hiking cycle, as far as he's concerned, is finished at this stage. But nevertheless, let's move on to China, because we've had 2 days of pretty weak data coming out of there. Yes. It's amazing how resilient our big miners are, isn't it? In the face of these, what appears to be, wow, it's not like those steel mills are firing and, they want more iron ore.
No, absolutely. I mean, the trade data yesterday, both imports and exports were lower, and quite significantly lower. I think imports were 12.4% lower, and that was the 5th monthly decline, and then exports 14.5%. So definitely quite weak reads on both fronts. And I think a number of people are probably surprised at how slow the rollout of policy support's been. There's been a few maybe haphazard measures, but nothing quite significant. And then if you add to that the deflation read today, came in at 0.3%, negative 0.3%, below the negative 0.4% expected. I think the picture there is looking a little bit concerning. And so I guess now people are probably hoping for a bit more of a significant economic stimulus to come through. And so I think I would agree with you that the miners probably should have been hit maybe a little bit harder than they have been. I think BHP is pretty much flat on the day today. You probably expect it to be being hit a little bit harder than that, particularly given China's our largest trading partner. So I think the focus there will be on whether we get more stimulus measures out of China.
I suppose all eyes turn to US CPI now. Is that sort of the next big hurdle we have to cross?
Yeah, tomorrow night. Tomorrow night?
Yeah.
Yep, so I think all eyes will be pretty closely watching that. I think forecasts actually for a slight tick up to 3.3%. It's possible we do start to see a bit of a tick up. They've done very well to bring it down pretty much like clockwork, from 9.1% to 3% currently. So I think everyone will be quite trigger happy if we do get a higher read than what it came in at last time.
Without a doubt. Will, great to have your insights as always. Will Science from Macquarie Capital. Okay, let's get to the leaders and laggards now, and there's a few stories to tell on that front today. InvoCare accepting the bid of TPG Capital, a slightly lower bid than what the business was perhaps positioning or angling for, but nevertheless, the job seems to have gotten done. So there's another stock that will disappear from the ASX.
I know, I was thinking exactly the same thing. It seems like a conga line of them disappearing into private equity at the moment. But I guess private equity does have a habit of, gobbling them up and then spitting them out down the track.
Yeah, we might see it back in a few years' time, perhaps. But Coronado Global Resources, not any major news there, as I
just
understand.
Maybe a bounce back up. Yeah, exactly.
Nanosonics, Seek, didn't see any news there necessarily. Sierra Resources is another one that just needs to have an update every so often, especially in this environment where it's lost about half its value in the space of 3 months. Let's go to the laggards now, shall we? And Lovisa, we've gone through that stock of the day. One for the bottom fishers if you're so inclined. ResMed, articulately put by yourself as to why we
possible explanation.
We always speculate.
Yeah.
Star Entertainment, couldn't find anything there, but China Hall Long Wale REIT downgraded. Virgin Money UK. Again, not too sure about that necessarily, but sometimes can be a bit of an interest rate proxy. Small cap leaders and laggards. Anything that floats your boat there? Probably Bowen Coal. No. Okay, moving on. Laggards. Let's have a look there. Nothing that really jumps out there either.
A few lithium stocks getting smacked around there. Mind you, they look like they're fairly small ones. Well, they are. They're in the small caps.
Yeah. There you go. So some small cap, small lithium miners there on your screen. Let's move on. What we're looking at tonight, it should be fairly interesting actually, because we've got some US earnings, Disney, Sony, Roblox as well.
Roblox, gosh, yes. I wonder if they're going to mention AI. I bet you they will. Many times. Exactly. Disney's in a lot of pain. It'll be interesting to see what that report's like, because apparently the Florida Disney World the numbers are dropping there, so they really have a lot of things going on at the moment.
I know I wouldn't want to start wolf whistling or whatever it is, but the whole notion of go woke, go broke or something like that, they've obviously had sort of been a part of the culture wars in Florida, called the ire of Ron DeSantis.
Indeed.
Is it kind of a consumer backlash against political positions?
I don't know. I've got no idea. Maybe people have decided, to fly to Europe instead. Go to the Amalfi Coast. There seem to be a lot of Americans over there at the moment.
Yeah, you can hear it from here. One thing that I thought I put in there, just because of the ructions of last week, was
the 10-year bond auction. Yeah, that's probably really important.
Yeah, well, it could be interesting.
Yeah.
Might be a bit wonky for us here, but again, there's all this concern about how the market's digesting this increased issuance. So, maybe we'll see some at least news stemming from that this evening. Tomorrow. And a few more companies to keep an eye on. AGL will report, AMP, QBE, and Downer EDI. Rio goes ex-dividend.
Right, yep.
So that might be a bit of a weight of the market, at least at the open, as we shift and shake. And inflation expectations data, which probably won't be too significant, but nevertheless, it's a good thing to keep an eye out for.
Absolutely.
Because that's what obviously central banks are keen on keeping down, is inflation expectations. But I don't know, I think that's about it. How did the market close, Danny?
Okay, so the ASX 200 up almost 27 points or 0.37% to 7,338, and the CIBO 200 4.5 points or 0.33%. So there we go, we'll take the green on screen.
Definitely, put it in the books. And well, you didn't put the moz on us today with the red blouse either, so we've broken the hoodoo perhaps, but it's a big time of the year, and there's a lot of great content on the platform and app. So if you want to get your, what Matt Coleman said from the CBA about the results, that'll be on your platform. Some other corporates as well discussing their results, all the macro news, a lot of great content. So website and app, that's where you can see it. Otherwise, have a wonderful evening, and we will see you again tomorrow morning.